think the broader challenge that one has, particularly when you're looking at AI, is really twofold. One is, how do you make sure that those leaders are taking decisions around deploying the AI into the right place, into projects where they're going to realize the return on investment that they expect? And secondly, in an environment where AI is having an impact on jobs, how do you then make sure that you've got the pipeline of people with those skill sets coming into the industry? If we have people at the management level who don't have that full range of skill sets, it also opens up the risk that we start not to manage those systems efficiently, or indeed that we start undertaking activity that increases risk, or in a worst case, puts us in conflict with the regulators.
It seems to me that, again, that's where a lot of new entrants or people coming into the sector may well be starting off their careers. The impact on the back office?
I actually wouldn't limit that to the back office, because one of the things about the payment industry is the sales activity, particularly in the enterprise space, is typified by a lot of formal processes. So requests for proposal, requests for information, technical due diligence questionnaires, and those are all things that generative and agentic AI does pretty well as well.
Welcome to the AI Adoption Podcast. I'm your host, Professor Ashley Braganza, and it gives me great pleasure to welcome Rob Lunn from Fnality. Rob, thank you so much for joining me and my listeners for this episode. I wondered if you'd be so kind as to introduce yourself and say something about Fnality as well, please.
Well, thank you, Ashley. It's a pleasure to be here. So I've worked in payments and related activities for a number of years now, first for a large international bank, but also in early stage startup ventures, and now here at Fnality. So I've experience in using AI both to make the delivery of products more efficient, but also as an integral part of a customer offering. And all that experience has been gained working with large enterprise customers, banks, e-commerce companies, major multinationals, the kind of people who typically transact very large numbers of payments. And it's that experience that brought me to Fnality. So to explain what we do, Fnality is a regulated wholesale payment system that helps financial institutions settle transactions on-chain in central bank money. We work with leading global institutions and operate through an ecosystem of locally regulated payment systems that are designed to support safe cross-border interoperability. And we can go into a bit more detail and perhaps explain some of that payment industry terminology or jargon later in the podcast.
Thank you for that introduction. I just wonder if you could tell us how blockchain is being used in the payment system.
Yes, and blockchain delivers a range of different benefits as a technology. But to answer your question, Ashley, I'm going to focus on two very specific areas where blockchain can really offer value in the payment space. And the first area is in resolving or mitigating settlement risk. So settlement risk is the risk that one party in a transaction does not receive what they expect because the other party fails to deliver. And if you've bought a house in the UK, you've almost certainly got some experience of settlement risk, because that conversation you had with the solicitor about, do we pay the money before we get the keys, or do we wait for the keys before we pay the money? That is a classic settlement risk scenario. But if you scale that up to the financial markets, where banks and securities brokers, dealers, etc., are paying cash for securities or delivering securities against the expectation of a cash payment with huge sums involved, you can see that the risks there are so much greater. And banks have to be aware of those risks, that a counterparty that's trading with them won't settle. And that creates costs for them. They have to assess counterparties for risk. And that settlement risk is also one factor in determining how much capital banks have to set aside under global regulations. There are other types of risks that they have to take into account, but settlement risk is one of those. And generally, therefore, this settlement risk creates cost. But in times of crisis, it presents a major systemic challenge. So if you think back to the Lehman Brothers collapse, for example, where banks start to question whether the counterparties on the other side that they're paying money to actually have the liquidity to respond and deliver the assets, or indeed the foreign currency that's expected. Where that trust starts to break down, liquidity freezes, you can have a major systematic impact from that liquidity risk. So how does blockchain help to overcome that? Well, a blockchain enables atomic settlement, which is a process whereby payment occurs if and only if the corresponding asset transfer happens. So those two events are intrinsically linked rather than being two distinct, separate payment and securities transfers, or two payments as they are in the traditional finance world. That removes counterparty risk and it reduces the need for costly risk management processes. So how does a company like Fnality do that? It's through using really some core aspects of the blockchain and its technology. So a blockchain is a distributed ledger, which means that all the participants have a copy of the ledger and each ledger shows the same data in the same state. So both the payer and the beneficiary know exactly what stage the transaction's at, and they can trust the information that they're getting from those ledgers because all the transactions are validated by consensus. So all the parties in that payment ecosystem are effectively getting updates at the same time and saying, yes, we all agree that's the state of the transactions. There's no central authority that's governing that. There's no black box in which transactions are settled that the participants do not have access to and cannot see what state those transactions are in. So once validated, those cash and asset transfers occur legally simultaneously and are irrevocable, which means there's no settlement uncertainty. So that is a core part of Fnality's offering to our customers, this atomic settlement that removes a great deal of that settlement risk. And
sorry, Rob, just explain atomic settlement again.
So traditionally in the finance world, if you were going to take a foreign exchange trade as an example, so somebody's paying sterling, they're receiving dollars. Those two payments are distinct, separate events. And if there's a problem at the bank that is, for example, paying the dollars, they have a system failure, they have a liquidity issue, which means they don't have the dollars to hand, or in the worst case, they're about to go insolvent and fail, then you face a challenge that the sterling may well have been paid over, the dollar's not. So that is settlement risk. Atomic settlement mitigates that risk by linking those two payments intrinsically together so that the one cannot happen unless the other happens. Payment occurs if and only if the corresponding asset transfer or payment happens in the opposite direction. And that's the value that a blockchain gives. It enables you to run atomic settlement because you can link the two events together, and because both parties are using a distributed ledger that tells them exactly what the state of the transactions are at all times. Mm-hmm. That enables that atomic settlement to take place.
Rob, thank you for that explanation of atomic settlement. Where does AI and blockchain come together? Can you see synergies between these two technologies?
Yeah, you need to look at what the strengths of the two technologies are. So blockchain, with this idea of a distributed ledger, where everybody has a view of the same data in the same state, gives the participant certainty, trust, a single source of truth that they can rely on. What AI is very good at, on the other hand, is interpreting uncertainty and extracting meaning from multiple unstructured data sources and delivering an insight to the user. So how does that impact the world of payments? If you take an end-to-end payment process at a large enterprise, from the moment an invoice is received, booked into an accounts payable ledger in the accounting system, right the way through to settlement at the bank and out to the vendor, reconciling that the payment they've received means the invoice is now fully paid. Now, there are points in that chain where there's an absolute need for certainty, the settlement piece, where value is transferred from one bank to the other. And there are points where the participant, particularly the payer, may have a lot of data to hand, but be very poor in insight into what that means. For example, they've got the information on the invoice, they've got vendor reference data that will include VAT numbers, bank numbers, they've got an accounts payable ledger in their accounting system. How much do we owe this vendor already? Are there any discounts we can claim, rebates, etc.? And they've got bank account data that shows them how much liquidity do they have right now, or how much is forecast at the time that the payment is due. And that's a huge amount of data, but how do you make sense of it all? What does that mean in terms of when and how best to execute those pending payments? And vitally, how much cash do you need on hand to do that at any one point in time? And where AI is really useful comes at the start and the end of that end-to-end payment process, where you can use AI to read some of the data that's in unstructured formats, images like invoices. You can extract the necessary data, you can pull it together, and you can start to build a picture of actually what payments do I need to make? When do I need to make them? Do I need to go and get extra liquidity so that I've got the cash on hand to execute them? And if you're the recipient, helping you in that reconciliation process. So if you think about that end-to-end process, yeah, the AI really comes into its own at the start and end, and the blockchain delivers the most valuable at that settlement point where absolute clarity is needed, ensuring a trusted transfer of value.
Are there any limitations in terms of how AI can be used in the payments industry? For instance, agents, particularly agentic AI, where these agents are not just processing vast amounts of data, but they're actually taking decisions on that data. So, for instance, can an agent sign or authorize a transaction? Can you begin to see, are there limitations in how AI could be used?
I think there certainly are. And yeah, there's a lot of discussion, particularly in the retail payment space, around that very topic. So you can quite easily foresee a situation where somebody has an app on their phone. Let's say it's to help them park a car. Um, they arrive, at a car park. They say, right, oh, yeah, I parked in this place. That's my registration number. And that would mean that rather than scrolling through all those various parking apps that we all have on our phone these days, you can just say pay, and the app then takes care of everything. Um, there is two aspects. That one is there a legal framework for the app to be the one that takes the decision and signs the transaction? And the second is, are consumers going to trust that process? And are they going to have the trust in the app to pay the correct amount of money? And I think the latter is probably as important as the former in determining whether or not those kind of technologies get widely used. Um, and if you look into the enterprise payment space, particularly at kind of payment processes that happen at scale today, and I'm thinking about the processes where card acquirers pay merchants that they've collected payments from the card system for, or an app store paying developers for downloads of apps. These take place today in a nearly entirely automated process, where effectively there are rules within those systems that govern: are we streaming the payments as they happen? Are we bulking them up, putting them into files that need to be transferred to a payment institution for execution? And incidentally, a lot of those payment institutions that are executing that volume of payments are using earlier forms of AI, like expert rules machine learning, to hit extremely high rates of straight-through processing. So the real question when I look at that, particularly around when you bear in mind that there are security and encryption technologies that allow the executing institution to rely on those messages that come from their customer already and depend on that being of truly validated, legally binding instruction to them. Would an agentic AI really add value to that process? Or would we be better focusing those agents on some of the up and downstream processes where we are not hitting those kind of rates of automation yet, and where there is certainly space for a lot of efficiency to be gained by using those kind of agents?
Yeah, so it's not as though AI agents are going to be ubiquitous across the entire payment system. It is more about, from what you're saying, understanding where AI would best work in the range of payments processes that exist.
That's correct. And I think there is a tendency when we look at the payments business to look at execution and settlement. But actually, a lot of the challenge in this happens in those up and downstream processes. And it's there that you can really see benefit from deploying agentic AI, for example.
How does one address the use of these technologies particularly given you're in a highly, highly regulated sector of financial services.
Yes, I mean, engaging regulators is critical. And I think for us at Fnality, the principle that we've used is very straightforward, which is that we'll meet whatever combination of requirements is needed to operate safely and compliantly. And our approach has been, to work within those established regulatory frameworks, albeit we're an innovative business. We'll work within that robust supervisory oversight, and we'll meet the same expectations around safety, soundness, governance, compliance as comparable institutions. And that's essential for building trust with customers and for protecting the broader financial ecosystem. But it also means that when we engage, and as any innovative business does engage with regulators, it's really critical to explain what the business proposition is and to help the regulators understand the business model, but also the benefits that you can bring to the ecosystem that the regulators are responsible for. Because regulators are often looking for two things now. I think they're looking for, one, how do I manage risk and apply the regulations that I'm responsible for? But also, there is an awareness amongst most regulators now of the benefits that technology will bring and the need to make sure that the jurisdiction for which the regulator is responsible for is also going to recognize some of the benefits of an innovative technology. And that's a broader approach that regulators are starting to take. But if you look at even the financial world, the approaches that the FCA has taken with sandboxes, etc., that's very much a recognition that actually there is a benefit to embracing some of this new technology in a way that ensures that it works within the frameworks that are established in the regulatory guardrails that have been set.
I mean, clearly there's a big technical aspect and to AI and to blockchain, but at the end of the day, the payments industry is also based around people. And I just wondered if you could share your insights into what impact you think AI and blockchain technologies are going to have on leadership and people in the payment sector.
Yes, and this is something that actually, if you look across the payment sector, not only at the kind of regulated institutions, but also into the enterprise customers, treasuries in multinational companies, into the e-commerce world in particular, then what you'll see is more and more people involved in payments and in the broader treasury landscape who are technically literate. So they're not necessarily software coders, but they'll have an understanding of the digital asset and blockchain space. They'll have an understanding of data and its importance, how an API can deliver benefits for them, what the capabilities and limitations around AI are. And if you can combine that with some deep domain expertise in payments, especially of understanding the risks that are involved and how to manage those risks, then that is, if you like, the ideal skill set for the payments teams of the future. I think the broader challenge that one has, particularly when you're looking at AI, is really twofold. One is, how do you make sure that those leaders are taking decisions around deploying the AI into the right place, into projects where they're going to realize the return on investment that they expect? And secondly, in an environment where AI is having an impact on jobs, how do you then make sure that you've got the pipeline of people with those skill sets coming into the industry?
And that's something which I think is uppermost in many people's minds, because you can see that AI is starting to come in and potentially take out some of those entry-level jobs. I mean, how do you see these technologies playing out, for instance, in back office processes and back office functions? Because it seems to me that, again, that's where a lot of new entrants or people coming into the sector may well be starting off their careers. The impact on the back office?
I actually wouldn't limit that to the back office, because one of the things about the payment industry is the sales activity, particularly in the enterprise space, is typified by a lot of formal processes. So requests for proposal, requests for information, technical due diligence questionnaires, and those are all things that generative and agentic AI does pretty well as well. So the impact is not just back office in payments, it's front office as well. And if you think about some of the use cases that we've already talked about, you know, junior sales and account manager roles, junior customer service agents, certainly operations analysts that are involved in pulling some of that data together today. Those are all the traditional entry points into the industry. And I think we almost need to start looking at junior roles slightly differently. So not just in terms of what that role delivers today, but also really to recognize that those roles are the pathway through which we're going to develop people with both the technical skill sets and the payments domain knowledge to enable them to take up those more senior roles in the future, and to make sure that they understand how to manage an organization or a part of an organization that is more reliant on artificial intelligence and potentially agentic AI in particular than it is today. But if we don't get that right, I think organizations are going to face some pretty significant challenges in the mid to long term.
Would you be able to say a little bit about what those challenges are that you think they might face in the long term?
Well, ultimately, I mean, for all the jargon that we put against the payments industry, it's actually a very simple business. It's a scale processing business. So if you can increase the volumes of payments into your system, it'll drive lower unit costs where you've got a system that's operating efficiently, which either means you get an increase of profit, or you can retain your profit margin, but actually lower your price and drive more volumes onto your platform. So understanding that dynamic, if we are not managing those processes correctly, if the AI is deployed in a way where customers see it as something that is off-putting or doesn't add value, then they will go elsewhere. That has an impact on volumes. If we have people at the management level who don't have that full range of skill sets, it also opens up the risk that we start not to manage those systems efficiently. Or indeed, that we start undertaking activity that increases risk, or in a worst case, puts us in conflict with the regulators, at which point the whole of the unit cost dynamic changes, because you're going to start to get other costs coming in. So really, in an industry which relies on keeping volume, unit cost, revenue in balance in order to drive efficiency, you've got to have people that understand all those aspects. And if one falls down, actually it has a knock-on effect on all of the others. And that's why I think it's really important that organizations understand the importance of having that pipeline of people into the industry.
Rob, thank you for expanding on what those challenges are. And clearly the effects of these technologies can have some fairly deep implications. And what should leaders in financial services organizations do to prepare for these challenges, to prepare for AI and blockchain technologies being used more extensively?
Well, I think we've spoken about the people side of it already. And when we look at AI in particular, I think there's a real paradox at the moment in terms of AI in the enterprise space, because a lot of industry surveys, actually, that both you and I have seen, a lot of the feedback at events like London Tech Week, all suggest that when large organizations undertake AI projects, they've actually today got a pretty low success rate. And yet, when you survey the same managers for their investment appetite to spend more money on AI, that is off the scale. So you do have this paradox of a technology which today is delivering less than people expect, yet there is a real appetite to invest more in that technology. And I think the risks in the payment space in particular with that is the risk that we kind of follow competitors blindly, that you start to deploy that technology in areas or in ways where we're not really recognizing the benefits of it. And I think it all comes down to a bit of self-discipline, really, in terms of being highly selective in the use cases that you deploy the technology against, choosing those areas that we've talked about where it delivers the best value, focusing on a small number of well-defined projects, and also looking at the total cost of ownership with an eye to the customer outcome, the regulatory obligation, and that long-term capability building. And I think for AI, that does deliver, hopefully, a kind of management framework that allows you to pick the right projects and deploy the technology successfully. I think for blockchain technologies, yeah, again, it's a question of looking at the applications where it delivers the most value. Um, and settlement to me is one of the very obvious ones where we can do that in terms of our ability to reduce down settlement risk through atomic settlement.
Rob, thank you so much for joining me on the AI Adoption Podcast. You've opened up an area which clearly has a huge amount of jargon, and thank you for explaining some of the terms as we went through. But I really do like the point that you made, which is payments is a really simple business at one level. Clearly, there is a huge amount of complexity that then sits underneath that, not least the regulatory aspects that govern, very importantly, govern the whole of the payments systems that the banks operate. But you've taken us through how these technologies, blockchain and AI, may well have an impact and influence on how the payment systems themselves are likely to evolve. And I think some of your insights as well into what this means for people, particularly people coming into the sector, and how important it is to have a pipeline of talent coming through, I think is one that I will definitely take away with me. So, Rob, thank you so much for joining the AI podcast. And I'd like to thank my listeners as well for joining us in this episode.
Thanks very much. It's been a pleasure.